and give them to the financial planner. Stuart Welch joins us here in the studio today, and we've got a couple of new questions we received in email that we want to pass along. It's good to see you, Stuart. Thanks.
Morning, Rick.
Okay, last week you talked about 529s and college savings and investing in college. Kind of gave you an idea and said, hey, yeah, this is. It
was a great question.
Yeah, it was a really good question, so we worked off of that. This week we have a question on credit cards. Very simple. This is from Judy. She says, can you explain the credit card law and how to get your interest rates lowered?
Well, first of all, the credit card law is there are a lot of things that happen. It's very consumer-oriented in the sense that they're creating a lot of transparency, and there's some consumer protections where they can't automatically raise your limits, and there's just a number of protections that they put in there for you. Now, having said that, what the credit card companies did, knowing that this law was going to come into being, is they front-run it, and they basically started raising fees and putting some details in there where you get nickel and dime a little bit. So you really, now you have to pay a lot more attention to your statement. I think you mentioned personally you'd run into a couple of problems that just were surprises to you.
Yeah, exactly. Now, when shopping around for the best interest rates, is it still fairly competitive out there among credit card companies?
You know, Rick, it is still competitive, and she asked the question, how do you negotiate a lower rate? Well, the first thing you do is you get on the phone with your existing credit card company, but literally before you do, if you can get some other rates, if you can find a better rate, a better offer somewhere, then use that to help negotiate a lower rate. One of the things that happen is it is going to be harder for people to get credit cards, and it is likely to be more expensive to own and use credit cards. So some people will find it harder to negotiate rates depending on what their background credit is.
Okay, let's turn to this second question that we have. This comes from Lois, another email question. What is the safest way to protect our money during the time of financial unrest? With value of U.S. dollar dropping, bank regulations increasing, and fees on investment accounts ever increasing, how do we keep from losing what we've worked for? That's a very open-ended, a lot of different areas there.
Well, I think the first thing is you want to make do you believe in that premise? And I would suggest that maybe I wouldn't agree with all of that. But if you did, one of the best things you can do is to lower debt. So if you begin to lower debt, you begin to create a more secure financial position for yourself. So the first defense against all of those things happening is to really consolidate and lower your debt. The second piece is, I don't agree with all of that, but if you want to hedge against it, I would continue to build a core portfolio based on, the biggest, bluest chip names in America. And if I wanted to hedge against that, I would hedge maybe with some gold ETFs, or if you really are scared of that, you actually would hold gold. If the world's going to actually collapse around you, probably the only thing, the flight is going to be into gold.
But that's not necessarily what your philosophy is at this point.
You
think the stock market's really strong?
I think you'd hedge. I think it would be a mistake to say the world's coming to an end, I'm going to put all of my assets in gold or real estate. I don't know where you do it. You just hedge.
Thanks a lot for answering those questions. GDA@WBRC.com. We're going to take questions from time to time. We're here with Stuart Welch. Send your email there, or go to our Facebook page, our Twitter, and ask questions there as well. It's good to see you. Much more to come on Good Day Alabama. JJ.